across all of
I'll
that
check
man's books because he has the Law and the Promise,
it out.
the Power of Awareness. I forgot the other one. The other one I read. Oh yeah, Feeling is the Secret. Yeah, Feeling is the
I'll
Secret is good too. I read
I'll
a
check it
lot of his
out.
books.
All right, yeah, appreciate it. Thanks for sharing.
Yeah.
All right, so first things first, let's go and look at our journal because we're doing pretty well this month. Um, September has definitely been a big improvement. It's pretty common for summer months to be really, really slow. And July and August were relatively slow months. June was decent. We ended up making 5R in June. September so far is really good. We've only taken one loss and a bunch of wins so far. Um, sorry. Oh, that's our new member, Thomas. Welcome. But anyways, so September has been really good to us so far. We did take two break-even trades today on ADA USD and what else? Entity CAD. Did you guys get in on that on those trades? ADA USD, that trade, and Entity CAD. Did you guys take that? They're pretty solid trades. And now we're just waiting on Entity USD, USD CAD, and Euro CAD, which we're gonna extend for now. But I kind of want to do a little bit like something a little different today. Um, not a volume. My thoughts on U shift. All right, yeah, let me go over U shift. But I want to do a little something a little different. I want to go over different types of structure and answer a couple of questions on that, and maybe also because Luke, you said you had some issues with knowing how far to look, like how much price action should you consider. So we're gonna go over that too. And then in the meantime, we'll see if there's any questions, and I think we should be able to fill the session with that. But yeah, let's get started by going over U-ship. All right, what are you looking at? That long trade? All right, gotcha. So what do you guys think about this for the other members? Before I give my analysis, let me ask you guys why you would or would not take that trade. You guys are able to answer that. Didn't like the week break. Significant break. I'm going to Thomas. I don't know if you're aware, but your mic is on. I mean, you can leave it on if you want. I don't mind, but no significant break. I didn't like the week break. I would agree with that. Yeah. So if we're gonna mark out our highs and lows, this is what we're seeing: our low, our high. So you're creating a lower low. So we're currently bearish, but then we get that new higher lows. So we're essentially looking to shift bullish. However, we never really get a convincing break below or above this high. And this is also what I talked about in that video that I made today. When you're trading reversals, especially when you're trading reversals, you want to make sure that you have a lot of buying power. So yes, mechanically, this is valid because you do have a break to the upside. However, from a discretionary standpoint, when you're trading reversals, we want to see and we want to be convinced that the buyers are in fact involved in price action right now. So, like Luke and CB Trade said, this trade would be better off if it had a more convincing, significant break of structure. That said, mechanically, like from a purely mechanical standpoint, it is valid. It's just a little something to prove your win rate. Also, Thomas, since you're new, you get to pick what song we're going to listen to today. That's our little tradition in here. Someone tag me. Let's see. I will wait for break even. Oh, that's a good one. Break even by the script. Me and Zach, David Goggins, who's in here, used to listen to this song every single day whenever we hit break even on one of our trades. And we traded together for quite some time. All right. You guys still hear me? Is the music not too loud? You guys can hear me, right? All right, cool. So, with that said, let's go over, let's do a little mini course. Let's go over a couple of topics. Let me just write it down for myself so I don't forget. But first, let's go over internal and external structure. Guys, can you name something else that you want to go over real quick? Luke, maybe if you got some ideas. Then what else did I say we were going to go over? Oh yeah, looking. Price. Is something else you guys think we should cover tonight? Maybe I'll clarify that proper and passing method I was talking about. Maybe I'll do that first actually, because that doesn't take too long. But I know there were a couple of questions about that too, and I figured I could have explained it better in my video. So I'm gonna quickly go over that first, and then I'll cover the other two topics. So the video that I made, I'm gonna arrange it. That's a good one too. And use a too large. It's a good one. So the first thing I want to talk about is proper and passing methods. So I made a little video on how to quickly get funded. Now I realized that I probably could have explained that a little better, and I think I may have rushed the video a little bit too much. But what I meant essentially, let's say trader A here. Say trader A wants to get funded with 200K, and trader A decides to save up $1,000. So he's got $1,000 saved up, and he decides to buy a 200K FTMO account. So he buys one 200K account. Now, in order for him to pass that, he's going to need to make 10% with a max 5% daily drawdown and a max 10% drawdown, which means that he basically cannot afford to have more than 5 positions at 1% or 1 or 2 positions at 2 or 3%, right? Before hitting the daily drawdown. So his goal is to make 10% with a max 5% daily drawdown and a max 10% drawdown. How long do you guys think that would take? Let's say you're playing it safe, right? Let's say you cannot afford to lose that $1,000 and you have to play it safe. How long do you guys think it would take to pass an account like that? Let's say you're risking, say 1%, which is pretty standard, right? You would need 10R. Now let's go over my trading journal. And let's see which months we would have made 10R. So if you look at my journal, there's only 1 month this year, 2 months, excuse me, in which we would have made 10R. So there's 2 months in which I would have passed that challenge within a month, basically. Which this is also assuming that you don't make any mistakes, you don't get slipped, because a lot of problems have slippage and spreads that are ridiculous too. So only 2 months, and we're 9 months into 2024, and only 2 months of those I would have been profitable enough to make 10R. So exactly, you could say that it could take easily 2 to 3 months. Easily take 2 to 3 months when trading realistically, right? When trading safe, I'll say that. Let's trade safe. So it can easily take 2 or 3 months. However, what trader B is doing, and this is what most traders do, is instead of buying one 200K challenge, they'll buy 4 50K challenges. Now, we're still at the same goal of having, we need 10% with a max 5% daily drawdown and a max 10% drawdown. But now we're going to be risking, let's say, 3%. So there's a way, way higher chance of us blowing the account for sure. Then again, because we've got 4 shots, we only need to essentially make 3.5, I don't even think 3.2 R, something like that, in order to pass the account, 3.3 R, right? Because we're risking 3%. So that's, what even is that? 3 times 3, shit. 3 times 3.33 R. That's what we need in order to pass phase 1, basically. So now let's take a look at the trading journal and see how many months we've had in which we've made 3R. So that's 1, 2, 3, 4, 5, 6, and September is already up 8R, so that'd be 7 months. 7 out of the 9 months in this year, we would have made 3R. And that would have been enough to pass phase 1. So let's say in that case, it would only take you probably 2 to 4 weeks to pass a challenge. Now, yes, you'll have a smaller account. However, that gives you the remaining months that you would have wasted trying to pass this challenge to make 2%. Because once you make 2% profit, you have basically regained your investment. Also, you get a refund, by the way. But once you make 2% profit, you covered that $1,000 that you could have used for your 200K account. Now, this is the method that most traders use. It's basically go high risk, go high reward, and aim for lower RR, but just go and risk a lot more. And this is also why I don't like talking about what percentage per month is good. Because if someone's risking 10% per month or per trade, and they're making 20% a month, they're only making 2R every single month. If someone's risking 5% per trade and they're making 20% a month, they're making 4R. So it's always subjective, right? But basically, go high risk, aim for relatively low R, and either blow the account fast or pass the account fast. And then once you've got one funded account, you can take it slow, and you only need to make 2% to get back your original investment of $1,000, basically. Now, once you have that payout, once you have the first payout, you can take months, you can take however long you want to make another 2 to 3%. And now you can basically scale up again and keep repeating this process. And in my opinion, this is a way better method because otherwise you're, working on that one challenge for 2 to 3 months. And it's not only exhausting, but it's also discouraging, seeing yourself go from, for example, 7% profit back to 4%, back to 8%, and then slowly but steadily making it towards that profit target. Most people just want to get funded quickly. And in my opinion, this is the best way to do it. So instead of, don't let your greed take control. Don't believe in, you have to get funded 200K instantly. No, just buy 4 50K challenges instead. Or buy, for example, instead of a 50K challenge, buy 4 10K challenges instead. And then you only need to make about 2% to cover your original investment, and then you can start to scale up. And eventually, you get to a point where you just buy 4 200K challenges. This is also what I said in that video. A couple of friends of mine buy about 6K worth of challenges every single month, and they pass or they blow more than half of those. So they go high risk, high reward, and they blow more than half of those, knowing that they only need to pass 1 or 2 accounts. And then they only need to make 1 or 2%, in which they have unlimited time for, to basically cover their entire investment and get a payout. So that is basically my advice. If you want to get funded a little bit faster, and if you want to just get to that live funded stage, this is, in my opinion, the best way to do it. And I think that this is also the way that most traders do it. I know I do it. I know a lot of friends of mine do it too. So that's that. That is basically what I tried to say in that video, but I didn't explain it the way I should have explained it, but hopefully this clears it up. So next up, we've covered that. So, oh shit. Let's talk about internal and external structure. Now, I made a little video about it, but there's some other things we can talk about for sure. So the first thing is knowing what you're looking at. What I mean by that is Luke, for example, asked me today, how do I know how far I'm supposed to zoom out? You know, how do I know I'm supposed to look at it like this or I'm supposed to look at it like that? That's where your backtesting comes in. But mainly, let's say you're taking 100 trades. Let's say you tested 100 trades. Just make sure that you give it different tries, right? Let's say you're backtesting 100 trades, looking at it like this with the most, like the more external or like the more zoomed out structure, and then give it 100 tries with you looking at structure like that. And then basically by backtesting it, you should kind of force yourself into staying on like one certain perspective, so to say, into staying on one zoom level, I guess you could call it. Because the more you zoom out, the more you see, the harder it's going to be to make a decision. Also, what John told you today, Luke, you don't really need to look at previous month's structure in order to identify your trade, because we're swing trading. We're already trading on the higher time frames. High time frames get respected a lot more, so we're already looking at strong structure. There's no need for us to go all the way back and look at previous structure. So I guess number one is know what you're looking at, but also focus on recent structure. There's really no reason to go back more than 2 or 3 weeks in price. So it's September 16th right now. There's really no reason to look at, for example, August 15th. That's more than a month. So limit how much you look to the left, because the more you look to the left, the more reasons you'll find to take or not take a trade, right? It's always how it is, and it's going to make it incredibly hard to make a decision. I don't know if you guys seen Larry Williams' video in which he says the more you know, the harder it, or the more indicators you use, the harder it's going to be to make a decision. And the same applies to just zooming out and looking at more and more external structure. So just make sure that you're looking at more recent price action. Let me just put on some lo-fi. All right, does that make sense, guys? Let me know if that makes sense. I think that makes sense, right? Okay, yeah, show me an example of when it's difficult. That'd be helpful. In the meantime, I'll explain to you guys too. Internal and external structure is very, very overcomplicated, especially by communities that Luke was in, for example, photon trading. Their way of reading price is believing that there's a reason for every single price tick and every single movement in price, and believing that we have the knowledge to basically understand why everything is happening. At SMA, we don't really believe in that. We think that the markets, for the most part, are random, and that we're just trying to ride a wave of a pattern that plays out more often than not, basically. So we don't believe that we can analyze the market with utmost precision. I don't think there's such a thing as, being very precise in a market. But basically, well, actually, I'll wait for Luke to find an example. I don't want to get into too many things at once. General but valid. Let me see if I can open that. ADCAD. Can you tell me what date that is so I can pull it up on my own chart? Or is that like really long ago? $2023 somewhere. All right, let's see. May. All right, gotcha. That's it, right? Isn't it? No. Sorry, guys, just give me 1 second. All right, never mind. It's going to be a little hard to find. Internal but valid. So yeah, in my opinion, this is valid. Oh, you said July. All right, yeah. Well, let's see if we can find it then. Oh, there you go. I see it. Yeah. Hey, Flora, how's it going? Why do you have a green name? Oh, nobody made you a member yet. Fix that. This trait. That's the one we're looking at. So yeah, this is totally valid, Luke. But I think John mentioned this too. You're making it very hard for yourself by trying to be on the right side constantly. Basically trying to trade both sides, right? If that makes sense. So you're trying to look at it like this, but you're also trying to look at it like that. So you're basically trying to, yeah, you're trying to catch both sides really. So that's where your backtesting comes in. I know if I look at my trades and if I were to zoom out, I would probably switch direction, because if I were to zoom out, I'd be like, well, but to be honest, the external structure is still bullish, right? So don't try and trade both methods, basically. I want to call them methods. They're essentially kind of the same principles, right? But you're trying to trade both methods. So either focus on really the more recent price action, just focus on the most recent bearish leg, or zoom out a little bit more and zoom or look at the overall swing structure, right? That's what I would like. That's what I think is maybe the issue, is that you're trying to trade both ways, essentially. Does that make sense? Make sure that what you're doing the same thing. Because otherwise you're essentially trying to trade two different edges. I know I said this last call too, like if there's shit, what did I say? Yeah, I said like if you have like 100 different traders and you give them the exact same plan that we're trading right now, one of our traders is going to say, I'm going to be looking at that long positions because we have a break there. The other one's going to say, I'm going to be looking at that short right there. Someone else is going to say, I'm going to be taking that long all the way up until there. And then, you know, someone else might even say, I'm going to be taking that short. All of them are equally as valid. Every single one of those trades is valid. The only difference is once you do decide to, you know, stick with one of those methods, do it consistently. So you can't go and be like, all right, well, today I'm going to be looking at that short. Tomorrow I'm going to be looking at that long, but then next week I'm going to be looking at that short. Because now you're essentially looking at 3 different, I don't want to say time frames, but sort of like, well, I guess you could say kind of time frames. I like the tip where visible on the day. Yeah, I think that's a pretty good tip too. A trade like this is more so visible, for example, on the 8-hour or the 24-hour time frame, which means that you're essentially trading a different time frame, right? Because if I'm zooming out like that and I'm looking at my trades like this, I might as well go on the daily or the weekly time frame. However, just come back to what I said earlier. Don't go and let's say it's, you know, it's Monday. I'm going to be looking at price like that. And now I'm going to be looking for shorts. However, next day, Tuesday, I'm logging on and now I'm looking at price like that. And I'm looking for that short. But then on Wednesday, I feel like taking that long because I'm looking at it in a completely different perspective. Make sure that you're consistently looking at price the same way. And how you like to do that, that's completely up to the trader. How aggressive are you as a trader? How much do you focus on overall structure versus how much do you focus on more recent structure? But I know if I go on into the swing trade sections, there's going to be a couple of traders who are looking at it like that. That's completely valid. That's 100% valid. That's why I always say that if you give 100 trades the exact same plan, you're going to get 100 different results. So I hope that clears it up a little bit. I don't know if that really answered your question, Luke. Let me know if it did. All right, cool. Is there anything else? Is there anything you think I should add, or you think I should explain to you better that's going to help you understand it? Just wait till you guys are done typing. Just how to decide which to take, right? On the smaller ones. Yeah, because one thing that I am noticing in your trading tool, and I think John said that too, is you're maybe too good at analyzing charts, and being too good at analyzing charts leads to you seeing every single thing. And I know that because I used to be that way too, especially coming from Photon, where they teach you every single thing about price. There's a million different reasons on how to trade, or like why price moves. So you eventually just get to a point where you're a master at technical analysis and you can analyze every little thing with liquidity and SMC concepts, which makes you want to get involved in everything too, right? At least that's what it was for me. And I think that might be what it is for you too. Like you're too good at reading price at this point. So kind of try and dumb it down. And in my opinion, look at recent structure. So take, for example, just the most recent trade that you're seeing. So in this case, that short position. That's how I would decide which one to take, right? Dumb it down a little bit. Don't go and overanalyze it. And I know that's hard for, both of us, because I came from Photon too. And they are masters at overanalyzing every trade. So just dumb it down a little bit. Go back to the basics. Go back to when you were, trading for 1 year, and just look at the more recent price action and keep it really simple and be like, all right, the most recent price action is a break to the downside with an imbalance right there, and just look for that short continuation. Luke says, yeah, that was one of the reasons I left Photon. Me too, to be honest. They claimed it was mechanical. To me, it was extremely discretionary, because it became really hard to know what to trade. And switching back from being 99% discretionary to being mechanical was really difficult. So yeah, I kind of know what you're struggling with too. But yeah, I hope that helps. Try and look at more simplified structure. Look at the more recent structure. What's going on in this last bearish leg, instead of what's going on if I zoom out all the way out to the left. So hope that helps. All right. Next up, Esteban asked me if I could check Euro NZD. Let's see what's going on. Euro NZD long position. We're talking about that trade right there. Correct? All right, let's see. What do you guys think? What does the rest of the squad think about it? Looks like built a lot of liquidity above the entry. Yeah, some LQ below. Looks fine. I like it. Kind of weird because FXCM. Oh, gotcha. Yeah, I'm using FXCM. All right. So you see how even though we're all trading the same plan, once again, we're all trading the exact same way, yet we're all having somewhat different opinions about this trade. It's kind of funny how that works, right? To me, this looks valid. I like what Flora says too. It did build some liquidity above the entry, basically, below these lows. But then again, what Luke says too is that you do have some liquidity lows over there. Once again, a little bit of a matter of how aggressive you are as a trader. Okay, yeah, if it looks like that, Esteban, if it looks like that on Um, on, oh yeah, 100%. I would take that for sure. That's a huge difference. If it looked like that, I would take that for sure. Gotta make sure that it lines up with your broker though. Like if only one data feed shows that it's taking out that liquidity, but the rest in your broker doesn't show that, then I would maybe second guess that trade. But no, that looks really good. I would take that for sure. All right, yeah, no, valid, totally. Shit, let me see where I left my notes. So I was going to discuss some other topics too. Shit, guys, can you remember which pair I have my notes on? Oh, there we go. Here's the sheet, Jeff. All right, so when is the range too large? Let's cover that too. I think we somewhat covered that with the previous explanation about internal and external structure, but let's go over it still. In my opinion, a range is too large. It's too large once there's a new sequence of highs and lows, or let me think how I'm going to explain this. Or if the bearish leg is bigger than the overall supply. I don't know if that's the best way to explain it. I'm going to keep it like that for now. If I figure out a better way to explain that, I'll make sure to change it, but let me draw it out for you guys. What I mean by this piece, if the bearish leg is bigger than the overall supply, it's basically, let's say, it's a little bit discretionary to be honest, but let's say that this is your break to the downside. But now let's say that, this is our bearish leg essentially, or this is the overall supply. But then we have a bearish leg that's, for example, twice this size. So now let's say we have a bearish leg that looks like that. Now you can see that, that overall supply basically fits in there twice. That's usually when it's so far gone that I would maybe consider deleting it. Now, this is a really difficult one because it's mostly discretionary, I will say. And it's also very dependent on the trader. But let me see if I can find some live examples. I want to make sure that I explain this right. Oh, this is a good example right at the bat. Let's say right here, for example. I would consider this one too far gone, and this would be too big of a range for me to trade. You see how, this is essentially our supply, but then, we get such a long bearish leg that we're nowhere near supply anymore. So I would consider deleting that because we're eventually just looking to trade structure back up into supply instead. So we might literally be better off by just waiting for a break to the downside and then looking for that long to trade back into supply. Does that make sense? I feel like I'm going to think about how I can explain that better to you guys. But that's kind of discretionary and also depends on the trader a little bit. When you do a challenge, would you check the feed from FTMO like the example we just reviewed on EuroNZD, or would you rather follow the chart on TradingView? So usually what I'll do is I'll just analyze my trades on TradingView, and if I go and place it on FTMO and I notice that it's very off and I notice that it's very different, that's when I'll be like, all right, let me see if there's, let me see if it's just this data feed. But that rarely occurs, and it barely happens with swing trading too. So the example on EuroNZD is actually pretty uncommon. Luke says, I would say if the entry is very near the boss, it's too far. The entry is very near the boss? I'm not sure what you mean. Oh, I think I get what you mean. Yeah. So yeah, no, you're saying if the entry is basically Yeah. That's not, yeah, it's not half bad, for sure, yeah. I think that might be a good way to explain it. The entry is near the boss. Yeah, so let's say you're extending it constantly, and once the entry has basically reached below the breaker structure, you could say that it's pretty far gone. I think that's not a bad way to explain it. Yeah, look, right on. So I think, yeah, it's not bad. I'm gonna steal that from you if you don't mind. I think that's a pretty good way to explain it. Yeah, no, it's not bad. Right. I can't remember who asked that. I think CB Trades asked that. Yeah, so let me know if that's helpful. Let me just go back to current date. Oh, I deleted my notes. Shit. Oops. Z, yeah. I'll have to go all the way back. I don't know if it goes that far back. It probably doesn't. No. Anyways. Oh, let me also show you guys. I can show this on call. I just don't want to show it on recording because it's actually private. But this is one of our accounts. And hold on. Let me find my password. One of our accounts, and the reason I'm hiding it from the call from the recording is because it shows the exact monetary amount. It's a relatively small account, to be honest, because it's a high risk account. But still, I don't want to show it on recording in case people are going to be watching this. Let's see. Oh shit, that's not it. There we go. Should be it. All right. Why is it locked? It's literally my account. Oh, wait. I know why. Not the right one. All right, so this is one of our accounts. Shit, I don't want to show the account balance on the recording, to be honest. All right, fuck it. Yeah, I don't care. Make sure you guys don't steal it. Like I said, this is one of our high risk accounts. So it's a relatively small account, but I want to go over this real quick. And also, I don't want to brag, but when did you ever have a mentor who showed you the MyFX book live on call? I don't want to brag, but literally I've never seen that before. I was researching videos on it, and I could find none except for Trader Nick. Apparently that guy's pretty legit. But sorry, enough bragging. This is one of our high risk accounts on our firm. And the reason I want to show you guys is because this is what breeds realistic trading. This is honestly why and how you can attract investors. Showing your investor that you made, for example, 16%, showing exactly which positions you took, the average holding time, so they know how long their money is going to be, in a certain position, and then showing which pairs you're trading on. This is all stuff that investors want to know. What's the R risk? So let me quickly break that down. This is a mixed account which trades both on EAs and it trades on manual trading. So some of these trades are going to be 1R, for example, or even negative R sometimes. But some are just going to be 1 to 3R. and those are usually the trades that we take, the trades that we send in call, and the trades that we take on the weekly outlook too. Anyways, you can see that we're up about 11,000 euros on this account. It's not massive, but we're hoping to basically get this and bring this out to investors and be like, all right, so this is our high risk account. This is our average drawdown, whatnot, basically show that to investors. Anyways, the reason I think this is highly important, I know that Esteban asked me about it too, is that an equity curve, well, Esteban asked me about a track record, not about the equity curve, but seeing an equity curve on basically on a MyFX book, on a verified platform, not only is good for attracting investors, but it's also good for your psychology. Because once you do this, for example, for 2 years and you're in a period of drawdown, eventually you just get to a point where you see that drawdown and you're like, well, I've been here a million times before, I don't care. We also took some money out of this account, by the way. You can see that too. About 20K out. But anyways, so make an account and link it. You can literally just link it to your MetaTrader. It doesn't take any time, any effort. So there's absolutely no reason not to do it. Link it to your account, build a track record, analyze your own trades, see what's going on, see what's going wrong too, see which mistakes you're making. And that way you're not only building a track record for yourself, you're building a track record for investors too. And it helps you mentally seeing the drawdown, but then also seeing how you basically overcame that. Also, it's a really good way to see basically, if you click the monthly data, you can see which trades you've taken. You can see how long you held those trades. You can see that, for example, this trade was held for about 4 days, stuff like that. And it just really grounds you into believing that, or it kind of changes your perspective from thinking that you have to make 10 to 20 R every single month to, for example, being content with 4 to 5 R a month. Now, yes, this account says 25%. Once again, high risk account. So that's why. All right. Yeah, that's what I just quickly wanted to show you guys. So this is one of our accounts. We've got a couple more accounts. There's also a couple on my partner's MyFX book, which unfortunately I am not allowed to show. In fact, I don't even have access to that MyFX book account because it's a little bit larger and well, whatever, it doesn't matter. So create a MyFX book. It literally, there's no reason not to do it. Also, if people in the future are going to be asking you, or even if you do end up, for example, becoming a mentor yourself, if you want to one day become a mentor, then you're going to need some proof. You're going to need to show that you are in fact worthy of teaching people. There's not a lot of teachers out there who have a proven track record. So make sure that whoever you're doing business with has a proven track record, and make sure that you become that person. If you want to attract investors, you need a track record. Even if you want to, on Darwinex, for example, even if you want to gain capital there, you need to basically prove live that you're actually profitable. There's no such thing as faking, what's it called, payout certificates or whatnot. I mean, even though nowadays you do have the whole QR code on payouts, it's still, I mean, I believe there's probably a way around that too. Anyways, just quickly wanted to show you guys that. So let's close that. And then there's one more account, which is like a test account. I'm not sure what that is exactly. I think it's like a testing account for one of our trading bots that we're only testing out. Yeah, you can see that that's been doing pretty well too. Yeah, it's like a small 1K account. And like I said, then we have a couple more MyFX book accounts, which unfortunately I'm not only allowed to show you guys, but I'm also not permitted to log into that account. right? Yeah. Quickly wanted to show you guys. Thanks, Flaro. Is there anything else we want to go over tonight, or did we cover most of it? Yeah, anytime, Miss Vaughn. Please just create a MyFXbook account. There's no reason not to. It's 100% the best way, especially with all the bullshit out there in the industry too. If we can make it a little bit more transparent, one trader at a time, I believe that we could be on course to changing the whole flashy payout certificates and Lamborghinis and Rolexes, whatever, the whole bullshit stereotype too. Really small compared to yours, but we have to start for some. Of course, yeah, no, totally. This account's been up this because we couldn't publish this account until we had the documents basically. It's called It's called Alternative Investment Fund document, which is a document you need in the Netherlands before you're able to open up a fund. So we were only able to launch this account March 11, 2024. But still, you're able to open up your own MyFXbook account, right? Obviously, you don't have to have a fund account. Which trading books are my favorites? So definitely, I know it's not necessarily a trading book, but Psychology of Money. Oh shit, which I was gonna send that to Tyler. I think I completely forgot about that. Anyway, I'll make sure to do that. Psychology of Money. It's not necessarily about trading, but it's more about understanding money. For example, one good example I feel like is people will see someone. Oh shit, my mic is cutting. I'm sorry. Is it better now? All right. Let me know if it keeps cutting. But anyways, one really good example that taught me a lot about trading too, it is shit. I can tell it's cutting by the green border. Fuck. One good example is someone sees someone who's driving a Porsche and they think that they're really wealthy. Someone sees someone else driving a 2000 Honda Civic and they think they're really poor. Now, not knowing that the Honda Civic guy has an investment portfolio of 2 million and the guy driving a Porsche is about to lose his vehicle because he can't keep up with the monthly payments. And that book really tells you about how perspective is everything in terms of money, in terms of trading. And that to me really changed the way I looked at everything related to money making. And then again, also, for example, another good example is brands, right? Clothing brands, Gucci, for example, or Louis Vuitton. 9 out of 10 times they don't sell to rich people. They sell to people that want to look rich. The rich people, they buy brands that we don't even know of, brands that are just comfortable. So it's all about perspective. And that's why I really like that book. So I highly recommend that. And also another good book is obviously Trading in the Zone and the Disciplined Trader. Could you give advice on how to replicate positive backtesting results onto the live markets? Yes. And John had a good way of saying that. He said, it's not just busy work. Backtesting is not just, putting in some work. Backtesting is live trading. It is basically what you're supposed to do. So it's not just busy work. It's not just something that you do because you need to. You have to really analyze your backtesting thoroughly. Look at your backtesting results too. I don't know if you guys do that, but look at your own backtesting results too. Go back in your Discord server or your online trading sheet and look at what you've been doing. Really look at what you've been doing and analyze it and basically just consume it. So you 100% know what you're doing and what you did in the past. I think a lot of traders don't look back enough at their screenshots. So really look back at what you've been doing for the past couple of months. Make a notebook, write down exactly what you've been doing. All right, Eswan, thanks for joining. And basically make a notebook, write down exactly what you've been doing, look at your screenshots, and then apply that to the live charts. But what a lot of traders do is they'll backtest, see their results, and they're like, all right, I think this works. Let me just go on the live charts. And then basically have a million different questions when you're on the live charts. So don't look at it as busy work, but just look at it as live trading. That's honestly the best advice I could give you. A lot of traders, and including myself, will think that backtesting is just something we have to do. But it's basically, I mean, of course we have to do it, but it's more than that. It's actually live trading. It's not busy work. Analyze everything you do and go from there on out. I mean, I've been repeating myself a couple of times now, but hopefully that's a good tip. But yeah, I think that's one thing that a lot of traders miss out on. Anyways, if there's no other questions, I think that's it for tonight. We had a pretty good call. Yeah, thank you guys for joining. I appreciate it. And if you guys are ever in the Netherlands, drop by the office. I've got 6 empty desks right now. Well, it's also because it's 9 p.m., but there's a couple of free desks. So if you guys ever want to trade from the Netherlands, come by. Right, thanks, guys. Thank you guys for joining. Appreciate it.